A few minutes later.
Good morning, miss.
One eternity later.
Okay, good morning. Thank you all for coming. So, let's get started. So, as you all know, we are here to finalize the 2024 financial statement in line with the MFRS 101. But let's say the management has creative idea. So, Zain, can you start?
Sure, yes. This morning, the managing director suggested we delay some year-end expenses, such as the marketing and maintenance expenses, into 2025.
Delay? Like should we pay later? Because I would also like to delay my expenses till next year.
I wish we could, but accounting doesn't work like that.
He said it's just a timing issue to make profit look better for the venue.
And that's not the only issue.
Marketing also wants us to recognize the full 3.5 million ringgit software contract as 2024 revenue, even though the contract only starts next year.
So basically, less expenses, more revenue, instant profit. Wow, why we didn't think about this earlier? Right, I'm joking. Please don't fire me.
Alright, so let's start with the basic. Zain, can you help us or remind us again back on the main objective of MFRS 101?
MFRS 101 is about one thing: true and fair view. Financial statement must reflect what actually happened, not what we wish happened.
And it's accurate-based. Expenses are recognized when they are incurred, not when the management feel nervous about the profit.
So if expenses already happened, we cannot pretend it went on a holiday until next year.
Exactly. Paragraph 31 also says financial statements must not be misleading. Artificially inflating profit is misleading. Full stop.
Plus, if we depart from MFRS, we must disclose it. And once you disclose, the bank will start asking uncomfortable questions.
Like, what is your profit wearing makeup?
Bombastic side eye. Criminal offensive side eye.
Now the revenue issue. Under MFRS 15, revenue is recognized when performance obligations are satisfied.
The software deals include installation and customization. None of that start in 2024.
But the contract is signed already. Doesn't that count for something? At least emotionally?
Emotionally, yes. Accounting-wise, no.
Under MFRS 15, signing a contract does not equal revenue. Control of the service has not transferred yet.
So basically, revenue only comes when we actually do the work. Very unfair. I also want my salary before I work.
Let's try. But yes, recognizing 3.5 million earlier would be a clear violation of MFRS 15.
New standards behave ethics. The MIA Code of Ethics required integrity and objectivity.
If we give in to pressure, we are not helping the company, but we are setting it up for future problems.
Absolutely. Worst case scenario could be bank approves loan based on fake profit, auditors flag issues, regulators get involved, and company can repay.
And suddenly, our LinkedIn headline changes to former accountant.
Exactly. Our responsibility isn't just to management, but it is for the users of financial statements. So we're not just saying no and walking away, but we offer solutions.
We can enhance disclosure, like future contract, strong pipeline, and growth strategy.
We can also prepare forecast and sensitivity analysis. Banks like transparency more than fair details.
So instead of lying, we just tell the truth nicely.
Yes, professional honesty with good presentation.
And if pressure continues,
We document everything and escalate to the audit committee. That protects both us and the company.
So our defense is standard, ethics, and receipt.
The next day.
Good morning. Just checking, are we still at accountant? Or just the number basically changed overnight?
still accountants, numbers are still honest.
Disappointing. I was hoping for a miracle.
Management has not responded yet, but yesterday pleasure is not gone.
Yes, I just got an email this morning. They want final confirmation today.
Yes, the polite version of "Are you sure you wanna break the rules?"
A little later.
Morning, miss.
You want guys to before we go in? Let's learn one last time.
From MFRS 101, expenses stay in the period they are incurred.
IFRS 15, revenue is recognized when the performance obligation is fulfilled.
No delay expenses, no early revenue, no fairy tale. Nice.
I have documented our advice and positions. If this escalates, we are covered.
Good, because I prefer screenshot over card loans.
So if the management is going to push us again today, then we're going to stay calm and consistent.
We explain the risk, including misstatement of the issue and loss of bank trust.
And we offer alternatives, clear disclosure, focus, and transparency.
So we don't kill the business dream, we just don't lie for it.
And if they still insist,
Then we'll have to escalate professionally.
Okay then. Let's go protect our future LinkedIn profile.
Alright, so let's go protect the company properly.
let's go.
80,000 impressions later. Would you please stop imitating me? It is starting to get very annoying.
To wrap up, the situation shows us why accounting standards exist. Firstly, MFRS 101 ensures a true and fair view. MFRS 15 prevents from premature revenue, and also ethics protects trust and credibility.
Profit numbers matter, but credibility matters more.
When trust is lost, no disclosure can fix it.
And auditors never forget.
So the moral of the story, don't bully accountant, because we remember everything.
Are you delaying expenses or recognizing revenue too early? This can distort your financial picture. MFRS 101 and 15 are here to guide you. Let's break down the key principles for accurate reporting. MFRS 101 mandates the accrual basis. This means you must recognize expenses in the period they are incurred, not when paid. No more delaying. And under MFRS 15, revenue is recognized when control of the goods or service is transferred to the customer. No more early recognition. By following these standards, you ensure your financial statements are accurate, transparent, and compliant. Build trust with reliable numbers.
Bestie. Yay! Forever. Yay! Yay!